Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I thought I would talk about buy and hold versus speculative trading. As you guys know from my last video, PORTOLA, a small cap biotech firm, made a very nice jump in its stock price, and accordingly I made a very nice profit off that. You can see here over the last day of trading, this was on Friday, I made a return of 11.14%. with just under $10,000 for total return on that day. One of the largest gains by far in the portfolio. And a lot of that had to do with the underlying stock here, PORTOLA, a very small cap company, a biotech company, a very speculative play on this particular stock. This stock could have went the other way, and as you guys know from that last video, there was a FDA decision that went that company's way that really jumped the price of that stock by 50%. And if I go back to the stock, over the last year, it's been performing phenomenally. You can see here up 145.1%. So very high risk, but very high reward. That's one end of a spectrum. The other end, as I mentioned in the intro, is buy and hold strategies. And a good buy and hold strategy would be with this stock here, ABBV here, AbbVie Incorporated. This is also a biotech stock, a pharmaceutical company. You can see it's a much larger company, $115.6 billion for its market cap. And you can see here that I bought this stock, and I'm really just going to be holding this stock for the longer term. This is sort of a long-term play. Basically, I'm buying the stock at a reasonable price, or at least a price that I think is reasonable, and I'm going to be holding this over an extended period of time with the hope that the price of the stock will gradually and steadily rise over time. And you can see that here, 5 years, 151.4%, outpacing the underlying S&P 500. And since this is considered a blue chip stock, one of the market leaders within the pharmaceutical industry, it's a large cap stock, it's got a great dividend yield, meaning it's a very solid company. It has very good net flow and net cash reserves, being able to provide such a great dividend. This company is a very strong and stable company. Unlike that last stock I talked about, PORTOLA, if the stock had, if the company had not passed that last FDA decision, and you can see that in the middle there, the price of the stock probably would have dropped by 50%. So instead of going from 38 all the way up to 55, I think it just barely touched $60 as well. This probably could have went all the way down to $15, maybe $16. So very high risk, but a very high reward as well. Like I said, one of the largest ever returns in the portfolio. And especially over one day, this is definitely the largest return in the portfolio. So one end of the spectrum, speculative trading, very high risk, high reward. The other end of the spectrum, much less risk, but less reward as well. To get that same $10,000 return with that same amount of capital in PORTOLA, I may have to wait, 5 or 6 years with AbbVie Incorporated. So, what, as a new investor, as an investor in general, should you be doing with your portfolio? And I really advocate putting probably about 80 to 90% of your portfolio in a buy and hold strategy, and then that extra 20 to 10%, again, given your risk tolerance, I think should be put into maybe some day and swing trading as well as speculative stocks like I have done. I probably had too high of a proportion with speculative stocks, but it paid off well for me. I don't advocate that for other investors. And another type of speculative trading that is much higher risk, I kind of think of this as a medium risk play, is trading companies like Ford here. As you guys know, I've done a lot of day and swing trading with Ford. I like the company overall. And this company can really be considered a fallen angel, basically a blue chip company that's really not been performing as other blue chip companies have been performing. You can see over the last 5 years, the company is only up 33.89%, even though there is a historic bull run happening within the markets. I think it's been the longest successive years of gains in the S&P 500 since 1930s or so. I could be wrong about that, but I think it's 60 to 70 years that this has not happened before. And I think a few months ago, it was the longest weekly gains in the stock market since 1981. So historic bull run. But you can see here the price of Ford stock for the last 5 years is only up 33.89%. The S&P 500 index fund would completely outpace this. And over the last year, you can see it's down 8.93%. So this is what is considered a fallen angel, definitely a speculative play, basically a blue chip company that has fallen on hard times and or has lost the confidence of investors, and you can see the price of the stock is falling off here. But the underlying fundamentals of the company are great. It's had record profits the last couple of years. It sells millions of cars per year. It just became the domestic auto leader within the United States with regards to sales. Yes, only over the last few months, but definitely something to consider when buying this particular stock. And it's got a great dividend yield as well. Currently, it's above 5.4% because of the decrease in the price of the stock. It's got a great PE ratio. But again, this is a much riskier play than that last company, ABBV, AbbVie Incorporated. This is definitely a blue chip company that is not in the spotlight of investors. So it's kind of a fallen chip, definitely a speculative stock. And again, I have a lot of capital in both Portola and Ford. So my portfolio right now is definitely a little bit high on the risk. But again, the reward on that is very, very significant. If Ford did come back into good graces of a lot of investors, this stock could definitely not only get back up to the $14 to $15 range here, I think it hit $16 at one point as well, but it could probably go up to the $30 to $40 range, just because in the bull market, this stock really should be trading about $20, $21 or so if it just kind of kept pace with the S&P 500. But you can see here it's only up 33.89%. So kind of a contrarian investment model. Basically, famous phrase by Warren Buffett, be greedy when others are fearful and be fearful when others are greedy. And I really think since a lot of investors are fearful about Ford, this is a great contrarian play, a very good fallen angel play, and kind of in the middle, a speculative stock that's not quite as speculative as that biotech company, that small tech bio company Portola I was talking about, but not as conservative as getting into a blue chip stock that a lot of investors are already on board with. So it's kind of in the middle there. So again, what is better? There's really no better trading strategy. It's all about risk tolerance. Buy and hold is very low risk, or lower risk, I should say. In a bear market, you are going to lose money either way with either a speculative play or a buy and hold strategy. But in a bull market, buy and hold maybe a little bit less return than some of the speculative stocks I've talked about. But again, it's all about risk and reward. So there's no right or wrong way of trading these stocks. But I would say, being a little bit more conservative investor, I would put more money into a buy and hold strategy, and then maybe put 10, 20% for new investors, maybe up to 30 or 40% for investors who have a little bit more risk tolerance, into doing some day and swing trading as well as speculative plays like the small tech bio company I was talking about earlier. There's a lot of plays like that. Ford is kind of in the middle there. There's other companies. Maybe you could consider GE also being in a somewhat similar situation as Ford. The management right now is not performing well. The company has fallen over the last year, even though there's a historic bull market going on over the last 5 years. It's only up 66.81%. Another fallen angel, kind of in the middle between a buy and hold and pure speculative play. Another one would be Target. Let's see if we can find Target in the portfolio. This is a company I probably wouldn't jump on board. Retail being essentially devoured by Amazon. This is another blue chip stock that, again, is down 22.99% over the last year. Over the last 5 years, it's only up 2.57%. So I don't think this is a great fallen angel or conservative, kind of in the middle speculative play. I don't think this company will recover back up to where it was. But a GE, I think, definitely has potential to recover. So there's a lot of different plays, a lot of different flavors of buy and hold as well as speculative plays. Some are pure speculative plays. Portola is definitely on the higher end of the risk spectrum. A Ford is probably on the lower end spectrum. And then there's a lot of great companies like Coca-Cola, Pepsi, Dow Chemical. Really, the majority of my stocks are what would be considered pretty conservative, longer-term buy and hold, low-risk stocks. So yeah, just kind of sum up the video. I think most of your stocks should be in a buy and hold, conservative fashion, high dividend, large cap companies, blue chip companies. But I definitely think to have a little bit of fun and try to get a little bit higher return on your money, definitely put your money into some smaller companies, small tech, small cap stocks, some biopharm, biotech stocks really are perfect examples and perfect vehicles for some very explosive growth. As you can see with my portfolio here, again, up $10,000 over just 1 day of trading, all because of that speculative play I did with Portola. So I hope that clears up some questions. I know I had a lot of questions after the 10,000 video where I basically posted about that play with Portola. A lot of investors were questioning whether they should jump on board. What are some great stocks like Portola? I definitely would caution you against trying to do a pure play like this. If you have some extra money like I do laying around, you can have a little bit of fun with a portfolio. Definitely try that. Definitely higher risk, but very high reward if you do end up getting into the right stock. But again, I think your proportion should be about 80% conservative long-term buy and hold with 20% in speculative stocks and doing some day and swing trades. But again, that's me. I'm a little bit more conservative with the portfolio, even though I have quite a bit of capital in Portola and Ford. I think overall the portfolio is quite conservative. I don't do a lot of penny stock trading other than Portola, which I had some pretty good information about. I don't do a lot of biopharm or speculative plays, to be quite honest. So yeah, I don't want to make the video too long. Just wanted to jump into the portfolio and comment on buy and hold versus speculative trading. Definitely think buy and hold is the way to go for new investors. I think after you get a little bit more education, definitely incorporate some day and swing trades, and then try to find some good speculative stocks to put a little bit of money into as well, like I did with Portola, and you can have some very, very good returns. So kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. Building the channel. Definitely appreciate all your guys' support. If you guys haven't signed up for the Amazon gift card giveaway at 10,000 subscribers, please do that. It's in the description below. Again, at 10,000 subscribers, I'll put out a live video selecting at random from the comment threads. Anybody who's put Robinhood 10,000 in that particular video, the comment thread Robinhood 10,000 will be eligible for the giveaway, and we'll give away some gift cards. Kind of try to do a live streaming event, have some fun with that. And again, if you guys have any good comments on stocks, trading strategies, anything in general, please leave it down below. Any good video ideas as well, please leave it down below, and I'll try to put out a video about your idea. So yeah, kind of with that, I'll end the video, and we'll see you guys next time.